Hello, it's Robert Miner with Dynamic Traders Group with this week's brief video for our YouTube and Twitter subscribers, where we take a look at one or two markets, sometimes in depth, one or two markets that might have a good trade setup coming up the next week. So I titled this is Drama in the Financial Markets. That might be a little bit of an overstatement, but I believe next week we're going to see some really key reversals. At least there's a potential for that in several of the financial markets that you ought to be aware of. So in today's video, we're going to concentrate on the stock indexes, even though I believe most of the financial markets are going to have some interesting reversals or trend continuations next week. For the stock market, everybody's interested in. We'll take a look at that. And again, it comes from our DT Big Picture Stock Indexes report. That's a report that I do for our DT Report subscribers every now and then, where we look at the big picture, the potential big trends, the big targets, that sort of thing. So if you're interested in the stock market and that massive DT Big Picture Stock Indexes report, hang in there for just a few minutes. I'll tell you how you can get it for free. Okay, let's get started. So this is the SPX weekly data through the week ending August 5th. Yesterday, I'm recording this on the 6th on a Saturday. About three pieces of important information that are on this chart that you'll be able to use in the upcoming week. I'm going to start at the bottom of the chart. And our DT oscillator, which is a really good momentum cycle oscillator, has been what we call dual look back overbought for 3 weeks as of the end of last week. Typically, it will be overbought no more than about 4 weeks before an actual price reversal occurs. So that alone is warning us, just the momentum cycle, that more than likely we're within about a week of completing what we call a weekly high, which would be followed by the market being sideways to down for 3 or 4 weeks or so, minimum of 2 weeks and potentially 3 or 4 weeks. So the point is, if we're looking at we're coming into a period near an extreme from when we'd make a weekly high, it's not a time we want to be orienting ourselves on the long side, even though, as we can see, the market is making new highs last week. It's a time that we, depending on our time frame of trading, we might want to be bringing our stops up, trailing them reasonably close on any long positions, knowing that good possibility a weekly high is near. And then right above last week's high is the 50% retracement from the January high. So that's a key piece of information to have. It happens to coincide just a few points above the May-June swing highs. So that's just basic chart resistance that everyone's going to be aware of. Everyone that trades the SPX is going to be aware of at this level for at least 3 weeks back in May and June was the resistance on this corrective rally before the bear trend continued. So they'll be looking at those price levels. They'll be looking at the 50% retracement, which everybody looks at. And also, here's something that most people won't be looking at, and this is a couple critical time factors. I'll start the one at the top. That's pretty simple. Hopefully most people are aware of it. That's just the high to high to high, and that was this past week. So when we have our momentum cycles overbought and we're near some chart resistance or price resistance, and we have just a simple time factor like that, well, now we've got time, price, momentum. But there's next week is a more important time factor. This is the low to high on the weekly chart, and the low high is frequently the maximum time before a comparable reversal is made. That is a reversal that would be a weekly reversal lasting at least 2 to 3 weeks. And it's just saying that the advance off of the mid-July low would be the same time period as this entire high-low cycle that occurred before the advance occurred. Again, it has a high probability of being the maximum time before at least a 2 to 3 week high is complete. So just on the weekly chart alone, this is a wake-up call that it's a good possibility that the SPX, if it hasn't completed a weekly high yet, that is likely to do so by next week. Now that's some information you can use. Now let's take a look at the daily and the intraday charts and see how they support this idea of a probable high next week. So just a brief announcement before we continue on. If you're interested in the stock index big picture report for just the next week, and for the first time in a year, we're offering our DT report trial offer for 1 month for just $19. And that's only through August 14th of 2022, because I know a lot of you will be listening to this video much later in time, but those of you who listen to it every week who are our subscribers, if you're interested in our DT reports an entire month, all the videos, all the updates, all the big picture reports, everything that's offered to our DT report subscribers for just $19 for that 1 month. So you'll be kept on top of all the major financial markets when they get in a position for a trade opportunity, when they make the reversal confirmation signal, and much more. So not only are the DT reports really great to keep you on top of trade opportunities, but every report, every video is an educational opportunity as well. So check them out. Do it now if you're interested, because the trial offer, again, this is the first time in a year we've offered it. It's only available for about the next week until August 14th, 2022. Okay, let's get back and look at some detail about the stock indexes. Well, this is the daily data, the SPX. And a couple things we want to be aware of here. One is these time factors. We showed you the low, low, high in the weekly data, where next week is likely the maximum time to complete a weekly high. And if we do that same low, low, high time projection on the daily data, that's actually this Monday, August 8th. We take the low to high count. So that would be Monday, August 8th. There's two other time factors either side of August 8th. One was just this last Friday on the 5th. That was the smaller time frame, low to high. And then we have one more here, a low to high would be on Tuesday. So we look at all three of these, and it really looks like by this coming Tuesday, we're likely to make a top, and when this daily high should coincide with a weekly high. Of course, that's what we keep you on top of in our regular DT reports when a market gets into that position, if it makes a reversal. And importantly, and this is really important, is not just the reversal, but then you identify the specific reversal confirmation signal. That's when you have the conditions for a specific trade strategy. So let's look down on this daily chart also at our DT oscillator, momentum cycle oscillator, and that on Friday it actually made a bull reversal, and this is a fairly short look back, but it's reasonably smooth, made a bull reversal, and usually that would be followed. Now, it was a bull reversal, by the way, above the midline, not too far from the overbought zone. Usually that would be followed by a day or two sideways to up before it completed that cycle. So that's indicating also that we're pretty close to completing that daily high. So we really want to be aware of that. There's a couple levels here you want to be aware of. Number one, should the SPX close below this little minor swing low close that was made last Tuesday the 2nd, that's at 40.91, that would be the initial indication that that weekly high is complete. Now here's a real important level below the market. We've been aware of this level for several weeks, and that is the closing high of this first advance in Elliott wave turns. I got it labeled a 1 or A, and then there's a ABC wave 2 or B. That's the closing high of the 1 or A should the S&P close below 39.11. That will indicate that this advance is a correction, and that eventually the stock index, the SPX, should continue in a bear trend to a new low. And I'm not forecasting that's going to happen. Well, that's it for today, my friends. If you liked what you learned today, hit the subscribe button. You'll be notified whenever we have a new video that we put up about a potential market opportunity and trading opportunity. Also, hit the like button if you liked what you learned. And remember, you've got until August 14th to take advantage of that DT Reports trial offer. So check it out. That's it for today. Robert Miner, over and out. Everybody take care.